About a year ago, I created an indicator called KCC%. It is an oscillator that basically measures the percent change between the price close and rank those percent changes and then smooth average it and create an oscillator. Now, it is not created to be the best oscillator, although I did my best to make it the best oscillator. But basically, we just want an oscillator that functions differently than the other oscillators, so you get a different profile of the strategy that you build. There is a separate video for the indicator, and the link is in the description below. And basically, I tested the indicator and it beats the RSI2, which is like the measuring stick for all mean reversion strategies. 6 months later, I added another variation called the ultimate C%. Now, the ultimate C% is based on the ultimate oscillator method of calculations. So I take the KCC% and I do 4 speeds, and then I add different weights to each speed, combine them all together, and get a new oscillator. And that oscillator performs much better than KCC%. And again, I have a separate video on that indicator. You can watch it with the link in the description below. In this video, we are going to take the ultimate C oscillator and torture it with the algo versus scrap workflow to see where it sits compared to the other indicators. I am very proud of the algo versus scrap series. This series was born out of necessity because of all the junk and the BS videos on YouTube about, traders testing, I don't know what, for 100 trades manually, and somehow they get the results and they rank it, which of course it means nothing. 100 trades is nothing to get a conclusion about an indicator, and especially if you're comparing it with other indicators. Also, I want to point out that all these tests that are done, they are done like randomly, sometimes on 5 minutes, sometimes on 1 hour, sometimes on daily. And of course, it's like comparing apples and not even oranges and watermelon. Just totally different. On the other side, the algo versus scrap series test each indicator with 4 speeds. So we are not looking for the best trades. We are looking for the number of trades per speed. So the indicator is tuned to produce 100 trades, 200 trades, 300 trades, and 400 plus trades. Those 4 speeds are then tested long and short, mean reversion and breakout, 3 different exits, 66 different markets. All in all, it produced about 3,100 strategies and about 65,000 trades. So it's extremely difficult for any indicator to go through all these testing and produce something. Most of the indicators fail, but some of them do succeed. And then we rank those successful indicators and to see which one is better. Now, both indicators are available for free on many platforms. So if you go to StatOasis community to free shares, you'll find this is KCC%. It's available for SQX, MT4, MT5, TradeStation, MultiCharts, and TradingView. And of course, the code is open, so you can easily transfer it to other platforms. And then if you go above it a little bit, then you'll see the Ultimate C oscillator. Currently, it's only available for easy language, but I'm working on making the code available on other platforms. Again, the code is open and you can easily port it to other platforms. So this is how the indicators look on a chart. At the bottom, we have KCC% oscillator, and on top of it, we have the Ultimate C%. Both of them plotted on the S&P 500 E-mini futures daily chart. So they look very similar, but of course, the signals are totally different. You can see here, we have many false signals basically, or not even false, but we have more signals here, even when we are using around the same speed. So here is a simple strategy that is using Ultimate C%. We buy when the price go below 25 and we sell when the price is above 75. And if we look at the results, we have 130,000 in profits, 3.2 return to drawdown ratio, 169 trades, an average of $773. That is really, really good. And then if we look at the annual period analysis, this is what we get. Now for the ultimate C, we have 6 variables. So the look back and the factor for the weighting and the smoothing average. And then we have the buy level and sell level and number of bars to exit. So I'm not gonna play with the smoothing average and the buy level and sell level just to make it more robust and it's easy to figure out. So we are only gonna optimize the look back, the factor, and the number of bars as exit on top of the sell level. So it's about 420 strategies. And let's look at a 3D graph. So this is the look back for the ultimate C from 2 to 7. And then here we have the number of bars as exit on top of the exit when the oscillator is above 75. And here we have the factor. So this produced the weights. So 1.5, 2, 2.5, 3, and 3.5. All of them are good, by the way. So even if it's below, you can see the 100,000 is here. So if I put this at 100, so everything is above, as you can see. All of them are above. But anyway, obviously 1.5 is really good. So I can lift the price all the way to 180,000, and this is still very stable area. So it doesn't matter, I mean, what I pick, as long as I am above 4 bars for the exit and above 3 for the look back. Everything is stable. So if I sort by return to drawdown, look at this, 10.6 return to drawdown. That's huge. And as expected is above 4, the number of bars, and then the look back above 3, so that's 6, and 1.5 is the factor. So we know everything here is stable. It doesn't matter what we pick. But let me pick this one and let's see how it looks like. This is the periodical analysis. Obviously, it's much better. Total trades now, look at this. It's almost $1,000 on average and more trades, 230. And overall, 221, 10.6 return to drawdown. Come on. And look at this curve. So this definitely beats the RSI2, which is, as I said, is the measuring stick. And I'm very proud of this indicator. I use it in many strategies. And the nice thing is the stability of this indicator because it averages down already multiple speeds. So that's why you have many values already stable. Whereas the RSI or even the KCC percent, it's very sensitive to the different speeds. And now we will take it through the algo versus crop workflow. First of all, we are not looking at average trade. We are not interested in making a profitable strategy. Instead, we are focusing on the number of trades. So we tune the parameters, the look back and the factor and the smoothing average to produce a certain number of trades. So we can compare it with other oscillators. So I want to issue in the slow speed at least 100 trades. So then I can easily compare it with the RSI with 100 trades, or with percent B 100 trades, or with Bollinger Bands 100 trades. And then we go long and short, mean reversion and breakout. So basically we're taking the opposite. So we are not going along with what the indicator works on as usual. And then we tested on 66 diverse markets. These are not ETFs and stocks where they are all the same basically. These are futures market. What I do then is I apply my robustness filters. It's not about a profitable strategy. It's about if it's robust or not. And then once we have these filter strategies, we compare it with other indicators. So first of all, let me show you the current database I have, which is about 22 indicators. And in total, we have about 70,000 strategies with more than 13 million trades. So it's a huge database. And out of that, we have about 3,000 strategies that pass the robustness filter with about 500,000 trades. Now, so far I tested 22 indicators, but not all of them are posted on the channel. Only 8 are posted. And you can see those 8. And I am very proud to say that Ultimate C percent is #1 so far out of the 22. Now, bear in mind, I show you that KCC percent was #5. So this is not tuned to make my indicator looks the best. I judge on the number of strategies that pass the robustness filter. And you can see out of the 22, the lowest is 66 and the highest is 198, which is the ultimate C. The next one is 179. And again, 179, I didn't show you, but I already posted Williams R, which is number 3 at 169 strategies. Now, this section represents the ultimate C percent numbers. So 198 strategies, which represent 7% out of all the strategies that pass the robustness filter. In 198 strategies, we have 31,000 trades, and those represent 6% out of the 500,000 trades. And if we focus on this part, out of the 198 strategies, we have 153 mean reversion and 45 breakout. We immediately can tell that this indicator, although it's good for breakout, but the edge lies in mean reversion, because we almost have 3 times the number of robust strategies in mean reversion than breakout, and slightly higher edge in long versus short. Now, like I mentioned, these are not strategies per se, but they are already passing my robustness filters. And we can see here, this is end of day. Remember, end of day, they don't have enough time to produce enough profits, but it's still 74 pass and 89 for bars and 35 stop loss and profit target. Okay, so we know ultimate C is number 1, produce the highest number of strategies that pass the robustness filter, went through torture with the testing without optimizing for average trade or net profit or anything. Remember, that's the key. We are not optimizing for profit. We're just randomly testing. Our only target is the number of trades. So when we find a robust strategy with good average trade, that really tells you something. But now we have all this data. So now what? We know it's number 1. What do we do? So now we can go through the database and find out where the edge lies. So I sorted here all the markets that these strategies are based on. So for example, this is Australian dollar, only one strategy on Australian dollar. Soybean oil 2, British pound 1, Bitcoin 2, crude oil 5. Okay, so we immediately notice that even though the oscillator is number 1, it's robust, but I wouldn't use it immediately on the Australian dollar. I only have one good strategy, but crude oil, I have 5. And if I highlight this and we go a little bit, we can see out of the 5, 3 long and 2 short. And look at this, they're all the same speed. So 3, 2, and 4, and long below 30, short above 70. This is end of day and 4 bars. And this is only the S&P and the mid-cap. These are not including the NASDAQ. They are sorted alphabetically. So if I go on the right, as expected, most of them are long. So no surprise there. And if I go down, look at this. This is Ethereum. This is crypto futures. So this is very interesting. We have 5 strategies of Ethereum. And 3 of them are short, 2 are long. But they are all breakout. So this is really a good edge. That means I use the ultimate C for breakout strategy on Ethereum, short or long, and I am positive I will create a good strategy. Then I go a little bit down, also lean hogs. I have 4 strategies, and we go, they're all short. That's very interesting. 3 of them are breakout. So I know the edge is in short breakout. And soybeans, this is also good. I have 5 strategies on soybeans. This is agriculture. Soybeans have the same big point value like the S&P $50. And if we look at this again, this is really, really good. All of them are long mean reversion. So this is what I can extract, which is some markets, this indicator will works really well, different speeds, and concentrated on either mean reversion or breakout, long or short. And that's what I'm looking for. And so, for example, like I showed you just now, the soybeans all of them long, all of them mean reversion. So this is a strategy built on soybeans futures, and it's using the basic numbers, which is 3, 2, 3, 75, and 25. So 3, 2, 3 for the ultimate C, and 75 is we sell, and 25 is we buy. And there is also a number of bars to exit, which is number 4. Just remember the agriculture futures, most futures have this problem, and you need to look at it. So for example, if I go back all the way, you can see now we are in negative values. So this is 0, and these are all negative. So for example, with soybeans, we need to start at 2010 in order to be positive values. So this will change, of course, because futures, this is continuous contract and it's stitched. And every time it's stitched, the premium shift up or down for all data. Still, since 2010, this is the regular strategy. And like I told you, soybeans is $50, the big point value. So if we look at, we have almost 200 trades at $326. So this is really good average trade. And we have 4.3 return to drawdown ratio. Now, from the database, this is not a strategy. We just picked that we have an edge here, and now we can build a strategy. And of course, to build a strategy, we can optimize and find a stable area, and we can optimize all these: look back, factor, smooth, buy level, sell level, and number of bars, and find a stable area. Instead, I'm not going to actually optimize, but I will do something even better. And this comes again for robustness. What I will do is I will only add a filter. I know these are stable values because all the edge are built around this value. So I'll just add a filter and see if I can get something. So these are pattern filters, and this is the original strategy: 68,000, 3.28 return to drawdown ratio. Our average trade is about 370. So if I sort by return to drawdown, we can immediately see a huge improvement. So 5.16, 5.13, 5.8. And look at our profit jump to 89 and 86. And these filters are extremely simple. First of all, they are not optimized. They are fixed as all my filters. You cannot optimize them. They are basically binary. It's either will work significantly or not work. So for example, 58 here, this is a filter based on range of the bar. And now these set of filters are all volatility and direction. So these are using my market regime filters. Again, this is the original strategy at 328. And here I sorted by return to drawdown. And this time we have many more strategies doing better. And this is expected because, as usual, volatility and direction are the best filters. So let's say 47 strategies are doing much better. And just to give you an idea here, all these top filters are direction filters. These are using market regime direction. And this is surprising because usually on the top, I see volatility filters. The key takeaway here is don't be afraid to take your strategy or your indicator through highly rigorous testing, even if they are going to fail. Because out of this whole failure, you will end up with something really robust. For example, now that we have ultimate C%, I don't need now to look at another million indicators. I have one indicator that's robust on at least 20 markets. That will give you, 100 strategies easily. Long and short, mean reversion, and breakout. To learn more about Algo versus Graph series, watch this video and I will see you there.